China's annual parliamentary gathering, known as the Two Sessions, begins next week. On Friday, President Xi Jinping, General Secretary of the Communist Party of China Central Committee, chaired a meeting of the committee's political bureau. They discussed the draft government work report to be submitted by the State Council to the upcoming National Legislative Session for review. It was noted at the meeting that China's economy made steady progress in the past year. High-quality development, further comprehensive reform and opening up were also highlighted. The annual session of the National People's Congress is scheduled to open on March the 5th. Well, for more now on China's economy and what we can expect at next week's meeting of China's top legislature, I'm joined by John Gong, professor at the University of International Business and Economics and a China Forum expert. Good morning, John. Welcome back to the show.
Thank you very much for having me, Gerald.
Always. So ahead of two sessions, there's a lot of talk of measures to expand domestic demand in China. How might that look like, would you say?
Well, I think during these two sessions, there will be more measures and policies being introduced to follow up with the initiative of a set of reforms that are going to be rolled out. I think it's extremely important that China is determined to continue to open up, to be an open economy, and to introduce reforms that make our economy more conducive to economic growth and to orient our economy towards a more of a technology-focused development model. And I think this is what the governing party is determined to do. And I think so far, at least at the beginning of this year, the economic performance of the country has been fairly good, marking a very good beginning for this year. And I think the objective of growth target for this year is going to be met more or less the same growth rate that we achieved last year.
Economic performance. I'm glad you brought up the annual growth target, because this is something the world puts a lot of stock in. They looked at China hitting that target, and last year that target of around 5% was met. And are we expecting the same this year, would you say, John?
Well, I would expect the same growth target. I have to put things into context. 5% for the world's second largest economy is already an extraordinary achievement. It's not an easy target. We're talking about creating a growth target that is, the additional growth is almost like the size of a Canadian economy on that scale, and it's actually not easy. And we all know that as countries becoming more and more developed, getting to the development camp, the growth rates usually it's getting more and more diminished. For the developed world, countries like the United States, countries in the European Union, achieving an annual target of around like 3% is already an extraordinary achievement. And China is actually clearly moving towards that direction. China is only a little bit away from the high income category according to the World Bank's GNI classification, a little bit short of $14,000 per capita GDP. So we're getting there already.
Last week, President Xi Jinping held a rare symposium on private enterprises. He met with the likes of Alibaba's Jack Ma, DeepSeek's Liang Wenfeng. What do you read into this, and what it tells us about the role of the private sector to boost China's economy?
Yeah, well, I hope it's a watershed event, something on the significance of which is on a scale of Mr. Deng Xiaoping's southern tour. I believe it's in 1991 or 1992. It marks the beginning of a tremendous growth period after his tour into Shenzhen and southern China at the time. And I hope President Xi's meeting with this group of private entrepreneurs, the leading executives of the private sector in China, is also going to be hopefully the same, function more or less the same way to boost investor confidence, to propel private companies to make more investment in R&D, in these cutting-edge technologies. Remember, the people sitting in that room, these are the leaders of the private, the best companies in China. including Jack Ma, including the leaders of cutting-edge technology companies, Lei Jun of Xiaomi, for example, and of course the CEO of DeepSeek, right? I mean, these are the hope of the high-tech growth in China. So I think this is a watershed event, and we're going to see more and more innovation breakthroughs, in my view, in coming months and years. And I think clearly the country's development is the right path, in my view.
Cutting-edge technology is right. Listen, John, we have less than a minute to go, but China, as we know, is shifting to new qualitative productive forces as a new economic model. So briefly, how would you say that's going, and how will it continue to evolve?
I think the international opinion and the narrative about China's growth potential, about China's innovation potential is starting to change dramatically. Remember just a few months ago, there's this notion that China is no longer a place for investment. It's the next place after China is not going to be in China. Chinese companies are stagnant. They won't be able to catch up with the American companies in cutting-edge areas like AI and robotics. During this intense competition, pretty much focused on high technology between the United States and China. But I think just a few months passed, and we're starting to see that this narrative, this myth, is being debunked. As a matter of fact, there are those great Chinese companies, making great innovations, and I think it's pretty healthy on both sides of the Pacific. This competition has propelled corporate China and corporate America to be investing more and more in R&D, in innovation capabilities, and I think this competition has generated breakthroughs on both sides of the Pacific, and maybe if we can keep this relationship peaceful and mutually enforcing, I think it's probably a healthy thing to see a competition like this.
All right, we'll have to leave it there. John Gong from the University of International Business and Economics. Thanks so much.
Thank you.